Agriculture, as you heard, was the biggest driver of growth, with the sector surging by 15.8% due to increased activity in animal production. FNB senior agricultural economist Paul Makube discusses this with us. Thank you so much for your time, Paul. Let's start with your overall reaction to this GDP reading.
Good afternoon, and thanks for having me. Definitely that was expected, given that we saw a rebound in the agricultural conditions, weather rebound, so a modest, improvement in production conditions that saw harvest outlook relatively on a better footing relative to last year. You'd recall that last year we came from a very devastating drought situation that saw about 22% drop in agricultural harvest, especially the summer crops. But if you look at the current situation, we saw increases in production, and we are also seeing across the board with animal production recovering from diseases that we saw previously. So an increase, and both on a volume plus price situation. On average, over 5% increase in prices of meat in the first quarter. So that were the factors that actually improved the situation on the quarterly agricultural GDP. On the export front, we saw an increase in exports of almost 10% year on year relative to last year, and that indicates a good fit on the agricultural side.
Positive gains, but let's also talk about the sustainability thereof in activity within the agricultural sector, especially when we look at the global economic landscape and the dynamics around tariffs. But also, we just heard earlier today a confirmation of a foot-and-mouth disease at current beef. Talk to us about what then becomes the near-term outlook.
Yeah, obviously, from a production perspective, we are not worried really. This year is going to be an excellent year from a production perspective. Obviously, from a trade perspective, we're worried about global developments, especially with regard to directions tariffs are taking. We had earlier on about the announcement of tariffs in the U.S. Which will affect the South African agriculture, especially Western Cape and Northern Cape, citrus, nuts, and wines. Obviously, after July, we will get an indication of what direction this will take, and which may mean redirection to other markets. But also that some of the produce is a need in the U.S. Some of the tariff increases might be absorbed by the U.S. consumer. On the disease front, in terms of foot-and-mouth disease, it is almost becoming a new normal with foot-and-mouth disease in the country. We've been with it for quite some time now, and I think we need urgency in terms of ensuring that we have a long-term situation to resolve it, because it impacts on the ability to actually export, given the potential for this industry to bring about growth and necessary employment and export value. As you are aware, China has imposed a ban on exports, and this development on one of the exporters, Karen, is actually worrying. But obviously, we're looking forward to a containment of the situation and a recovery.
Lastly, looking at the South African growth and the economic activity so far in the year of 2025, is there still confidence that the basic, structural key industries will be able to weather any type of storm, given from the domestic or the global challenges that you've already highlighted on?
Yes, we've seen that the global, South Africa's economy is quite pedestrian at the moment. But there's a potential for a spurt of growth in some sectors, and thanks to the Reserve Bank's cutting interest rate 25 basis points, that will go a long way in improving confidence in the country, but also ensuring that the consumers welfare is actually improved and we get the traction in consumption. And obviously, it all depends on what happens on the global market. We have got quite a number of challenges, apart from trade issues. There is renewed escalation of tensions, although there are some talks to resolve the situation in the in the Middle East and also in Russia, Ukraine. Is still very fluid in terms of resolution, but obviously that is something that we have to monitor going forward. We need that kind of confidence and certainty to ensure that the economy can start functioning normally. But I think what is important is homegrown in terms of changes on or transformation in the economy, the necessary changes that are required to ensure that we have good traction. We have got services being restored. We've got services being improved to ensure that we can move produce out of the country, but also that costs are minimized given the current situation that is quite dire.
Thank you for your contribution. Paul Makube is a senior agricultural economist at F&B, talking to us there about the developments in economic growth. Of course, Stats SA figures coming in earlier today showing that 0.1% hike in GDP.